What's up, people? You're tuned in to Keeping It Real Estate on the Find My Way Home Network. I'm your host, the Real Estate Coach, and I'm joined by my real estate wrecking crew led by the Dean of Homeownership University, Scotty Shang. Good morning.
Good morning.
The Mortgage Mistress, Alisa Alvarez. How are you this morning?
Hey, guys.
And Big Bang Frank Casares. What's going on, buddy?
How you doing there?
We're hanging in there.
All right.
All right, we got a lot to do, so let's get right into it.
We always have a lot to do.
Yep, we're going to start off with
The music.
mortgage basics. I know, same music, huh? Well,
What happened to
we don't have a big
Lowrider?
budget on this show, so we got like one song.
Is that why we can't afford Lowrider? We can't afford
Exactly.
royalties?
We can't pay for real songs, Lisa. They got to be like fake things that some guy in his basement is recording and putting on 5.
Let's just beatbox it.
All right, the mortgage basics
We're waiting
brought
for
to
Frank to
us.
bring us some loops.
Oh my
Sorry.
God, this is your moment, and you're not letting me go through it, Scott. We start off with mortgage basics brought to us by our friends at Broadview Mortgage, serving Southern California home buyers since 1988. And serving them well. You can reach them by calling 714-660-2013. All right, you guys ready for a crazy topic?
Crazy
Yes.
away.
Oh, crazies.
Topic
Crazy.
today is how do I
mortgage?
beat or how do I wiggle out of permanent FHA mortgage insurance?
Oh, I like that one.
How can I wiggle
Is that
out of
your-
my
is that your topic?
FHA permanent mortgage
Yeah.
insurance? Because we know that this is a topic we wouldn't put it in if there wasn't a way to wiggle out of it in that stuff.
There are a couple of different ways to approach this.
Okay, hold on. You ready?
No, okay, it's not a drum roll a couple of ways. They're not that short and succinct.
Oh.
But there are a couple of different
God, I couldn't hope
approaches.
for a little short and succinct answer from this group.
Shall I bring back the bullet points?
You-
And one.
So there's two ways to approach this. First of all, there's the resurgence of private mortgage insurance. So back in the day when things were hairy, a few years back, private mortgage insurance, and so that's a mortgage insurance product that you can use with a conventional loan product. That was kind of hairy for a few years. It was real touch and goes. It was touch and go. It's come back super strong. We can go all the way up to 3% equity in the property. So that's 3% down payment for a purchase or 3% equity in a refinance. The lender can pay it, so you have no monthly mortgage insurance. There's no upfront mortgage insurance. It's just a small monthly, and it's almost always less than FHA. So that's one way. So that's really a really aggressive way. Now, conventional mortgages is a little bit more difficult to qualify for. So you have to have lower debt to income ratios, lower credit scores is going to mean a lot higher closing costs. So in some cases, if you don't qualify for conventional and you have to do FHA, look at an ARM. Look at a 5-year fixed FHA ARM. The interest rates are really low. It's fixed for 5 years, and with what the market's doing today, you can put yourself on a financial plan to easily qualify for a conventional mortgage. Ride out the equity increase. So here's a good strategy. If you're in a loan right now, take a low interest rate on that short-term fix, because if you get FHA now, you've got permanent mortgage insurance. So the bottom line is you're going to get out of it as soon as you possibly can. 5 years is good, right?
Yep.
So take the super low interest rate, continue to make the same payments as you did before you refinance. That's going to accelerate your principal balance reduction. So you're going to pay your loan off faster because you're making extra principal payments. At the same time, we're leveraging the increase in equities, the low inventory, home values are going up, and as soon as absolutely possible, refinance that thing into a conventional loan with either private mortgage insurance at a significantly reduced rate, or maybe you can reduce or eliminate your mortgage insurance entirely. And there you go.
You've wiggled out of the mortgage.
I didn't even need bullet points, and that was fast.
That's pretty
Does anybody have anything to add, or can we actually have a segment that's short, sweet, and to the point? Because that was nugget.
Of course
that
you're
was
gonna
nugget.
say
That was
actually
gold.
Real quick, never
Frank, I was
mind.
totally going to say no.
I was going to say it's encouraging to see that we have a better understanding, a better grasp of the ARMs nowadays, because back then, obviously, it led to a major problem, people not understanding.
Yeah,
what
don't
they're
be
getting
afraid.
into.
Do not
No,
be
if
afraid.
you have somebody if you have a loan officer or lender that discusses your financial strategy for using these loan products, it's not just about how can I make the lowest payment. It's not about that. It's about I have a specific strategy I need to accomplish. A professional loan officer is going to educate you on all of your options, run all the numbers, and you can make an educated decision if that's going to be the best choice for you.
I like it. I like Scott's breakdown. And I don't say that very often. So
I'm not going to add
congratulations.
anything because that was nice and
Should
clear.
we put,
was.
should
It
we
was
put a
good.
bonnet on it?
Let's put a bonnet on it.
Let's put a bow on it.
Let's put
Bow and a bonnet.
Let's put a little bow. Let's put a little bow.